Hello and welcome to today's webinar. Thank you so much for joining. So we're going to get started here in a moment. As we're logging in and confirming the audio, I would just ask that you please like this video and please subscribe to our channel as well. Let's connect. We post these weekly videos, and so hopefully people find it helpful. So we'll go ahead and get started. So today's topic is how to make solo 401k contributions by the extended tax return deadline. So with the tax return deadline coming up, we're fielding more and more questions from our clients and from prospective clients. So hopefully this will help answer a lot of those questions. I would encourage you to ask questions in the chat as we go through it. Or if you're watching this on a recording, you can ask in the comments. So we answer those, we turn those around usually within a day or so. So let's give an overview of where we're headed. So we're first going to talk about what is the deadline, when is the deadline to make solo 401k contributions. What about a scenario where you didn't set up a plan in 2019? So are there any options for you? And there is an option. There's what's called the SEP IRA workaround. So we'll go through how that works. We're also going to talk about for those folks that already have a plan, but maybe want to be able to make Roth contributions or Mega Backdoor Roth contributions for the prior tax year, how you can do that. Like if you have a plan that doesn't offer that ability, there is a way to be able to do that as well. And then just some practical tips and how to get more information about your situation. So let's get started and go through it. So first off, when is the deadline to make solo 401k contributions? So per IRS publication 560, the deadline to make both employee and employer, and I'll underline that, both employee and employer, because sometimes there's confusion about that, but it's right there in publication 560 that the deadline for both types of contributions is the tax deadline for the business. So the business tax return deadline, including any timely filed extension. So that begs the question, well, what type of business do you have for your self-employed business? Are you a sole proprietor? Are you a partnership? Is it taxed as an S corp? So this chart here on this page provides the extended deadlines. And then of course, you would have had to have filed a timely extension. So for example, for this year, sole proprietorships, because of the COVID crisis, the IRS automatically extended everyone's 1040 deadline, which is how a sole proprietorship reports income, to July 15th. So if you filed a timely extension, you now have until October 15th. Or a partnership or S corporation, if you filed a timely extension before March 16th, now you would have until September 15th. So here in about a month, to be able to make a solo 401k contribution for 2019. So consider that and see how that would apply to you. Now, in terms of a scenario where you don't have a solo 401k for 2019, in other words, you didn't meet the solo 401k establishment deadline, can you still make 2019 contributions? So for 2019 tax years, the deadline to establish a solo 401k plan was the end of the tax year. So if you are on a calendar tax year, like let's say you're a sole proprietorship, that means you're on a calendar tax year, you would have had to have established a plan by December 31st of 2019. So if you didn't establish the plan, which establishing the plan was really just signing the plan documents, if you didn't do that by December 31st, then you can't make contributions to a solo 401k for 2019. But there is another type of contribution that you could still make. You can make a SEP IRA contribution. So that's why it's referred to as the SEP IRA workaround. You're taking advantage of the fact that for 2019, the SEP IRA, the deadline to establish a SEP IRA is actually your tax return deadline. So it's a later deadline. So there's a disconnect between the 401k establishment deadline and the SEP IRA deadline. The SEP IRA deadline is later. So you would still potentially have time if you filed an extension, right? Just like on the prior page. In that case, you could still set up a SEP you can make a SEP IRA contribution, which the SEP IRA contribution limit is really the employer contribution limit. So it's 25% of your self-employment compensation not to exceed $56,000 for 2019. Again, if you're a sole proprietor, then you would have until October 15th then if you file the timely extension, and then you can work with your tax advisor to report it, for example, on your 1040. Now for future years, so if you're watching this in a future year, if you're thinking about future years already, the Secure Act aligned the solo 401k establishment deadline to the SEP IRA deadline. So they're the same thing. So now going forward, the deadline to establish a solo 401k is going to be the tax return deadline, just like the SEP IRA. So you're not going to have this really SEP IRA workaround to worry about for future years, because you'd still be able to set up a solo 401k. So we got a question. Thank you so much for asking that question. I appreciate that feedback. So could you still amend a plan to make an after-tax contribution for 2019, assuming the plan was established timely? Well, that's a great question. So that wasn't even a plan. So I appreciate that. So that's on our next slide here. So here we're talking about this so the answer is yes. So the scenario here, again, the question is, could you still amend a plan to make an after-tax mega backdoor, for example, contribution for 2019, assuming the plan was established timely? The answer is yes. So here we're talking about a situation where you might have a solo 401k plan that existed and was established before December 31st, 2019, but maybe you set it up with a provider that only allows for pre-tax contributions, doesn't allow for Roth contributions, or maybe they only allow for pre-tax and Roth contributions, don't allow for voluntary after-tax contributions, which is really how you make that mega backdoor Roth contribution, because you're taking advantage of the higher contribution limits that apply to voluntary after-tax contributions. So if you have a plan that was established by December 31st, you met the establishment requirement. And then if you restate the plan before the contribution deadline, which is later, which is your business tax return deadline, including any timely filed extension. So if you restate it to a plan like our plan, which does allow for Roth contributions, our plan, which does allow for voluntary after-tax contributions, then yes, there would still be time to make that Roth or voluntary after-tax contribution. Again, assuming that you filed a timely extension. So you want to consider practically the contribution limits, of course, right? You want to consider, the requirement that you have separate sub-accounts for Roth and for voluntary after-tax contributions. And then keep in mind that there's a difference between the contribution deadline, which is the business tax return deadline, and then converting the money. So typically with the Mega Backdoor Roth, you're converting those voluntary after-tax funds over to a Roth sub-account or maybe to a Roth IRA. So there is no requirement that those funds be converted by the business tax return deadline. So hopefully that answers your question. And we got another question here that looks like it relates to the prior slide. So let's flip back and go over that slide again. So thank you again for the questions. I do really appreciate that. So the question here is, can you please confirm the changes on the Secure Act and establishment date? For 2020 solo 401k plans, we no longer need to have it established by December 31st, 2020. We can wait until the tax deadline in 2021. That's exactly correct. So one of the changes in the Secure Act is to align the deadline to the same deadline that applies to a SEP IRA. So that's why this whole SEP IRA workaround doesn't really apply going forward. So that means that it is going to be that the establishment deadline is also the tax return deadline. So you no longer have that disconnect. So thank you for that good question. So now let's go forward to the practical tips. So again, the context here is making contributions by the extended tax return deadline. So assuming you meet all the requirements and you're eligible, you can make a contribution. You can go ahead and do that. Practically, though, you want to not wait until the last minute. So processing times at a bank, at financial institutions like a brokerage, they really increase during these heavy tax filing seasons. And so if it's not going to be an excuse to say, well, the bank or the brokerage can open up my account on the last day, there's no additional time that's allowed. So you want to give yourself plenty of time so you can proceed calmly and get it done. So you also want to keep in mind the normal issues when it comes to opening up accounts, right? It has to be opened up under the name and EIN of the solo 401k, whether it's at a bank or a brokerage. And we handle that for our customers. For example, we prepare the brokerage account paperwork. We prepare a bank account packet. We'll get on the phone with your banker. So we're very hands-on, and we don't force you to go to one bank or one brokerage. We've got clients at hundreds of different banks and different brokerages all over the country. You want to make sure you've got separate sub-accounts for spouses or partners. Make sure you have separate sub-accounts if you have pre-tax, Roth, and voluntary after-tax. Obviously, that's very important if you are on the prior slide and you are restating your plan to be able to make Roth contributions, because obviously you already have a plan that doesn't allow for Roth. You're not going to have a separate Roth account. Now you got to open up that separate Roth sub account to make that Roth contribution by the deadline. As far as making the contribution, sort of the best practice would be to do it by check, because you have that paper trail, right? So if you take the check approach, you write annual contribution on the memo section of the check, you make the check payable to the solo 401k. It really just needs to be postmarked by the applicable deadline date. And then just document that in your records. If you are going to want to make an electronic contribution, which is certainly acceptable, you just need to keep in mind that some institutions will have naming requirements as far as the name from which the funds are being transferred, particularly at brokerages. If you're trying to do an electronic transfer, they will oftentimes want the name from which the ACH or wire is sent to match the name that's on that brokerage account. So given that, you may want to set up a bank account just to meet the deadline. And then you could always circle back later and move the money from the bank account just internally from one sub account to another, to say maybe if you open up a brokerage account later, so you can invest the money through that brokerage account. So, and that's another thing with banks. Usually they're a little bit quicker than, especially at the last minute when you're trying to meet the deadline. So please ask more questions. I really appreciate the participation. Thank you again so much, everyone, for watching. Please like this video. Please subscribe. Let's connect, and we'll give you notifications of our weekly webinars. Again, if you're watching on a recording, you can ask questions in the comments, and we'll get back to you within a day or so at the latest. If you want to get more information about your situation, please email us at business@mysolo401k.net. You can call us at 1-800-489-7571. Thank you again so much for watching, and hope everyone has a great day. I'm not seeing any more questions, so thanks again, everyone, for watching. Take care.